Welcome back to Oats and Moats, the show where markets move fast, caffeine hits faster, and Cathy tries to keep me from going off the rails. I'm Mark.
And I'm Cathy. It's Wednesday, November 19th, 2025. It's 2 a.m. on the East Coast, and while most people are asleep, the markets are already tossing and turning. Futures are in a mood. Nasdaq futures down 0.22%, S&P futures off 0.11%, and the Dow barely nudging, down just 0.06%. It's like the Dow hit snooze and refused to participate.
Classic Dow behavior, slow, steady, and somehow always pretending everything's fine. But the real story, all eyes on Nvidia's earnings after the bell today. This is the main event, the heavyweight title fight, the reason every trader has 3 energy drinks in the fridge.
And with good reason. Expectations are massive. Wall Street is looking for around $54.8 billion in revenue, yes, billion with a B, compared to $35 billion this time last year. That is just absurd growth. And Nvidia hasn't missed a revenue beat in 12 straight quarters. They are the Beyoncé of earnings season. They show up, deliver, and break the internet every time.
You know it's big when even the bond guys are paying attention. Nvidia's own guidance, $52.9 to $55 billion. So the street wants them near the top end. Not miracles, but extremely solid execution. And honestly, Nvidia usually says no problem. We'll do that while also reinventing AI on the side.
The options market is bracing for a 7% move after the report. 7%. That's a potential $320 billion swing in market cap. Snapchat's entire market cap is basically tip money at that scale.
Analysts are still pounding the table. S&P says buy with a $250 target. That enormous $500 billion order book, although only $350 billion is near term, is a big confidence booster. Most targets sit between $250 and $265. EPS expectations are about $1.25. And don't forget, Nvidia and Microsoft just pledged $15 billion to Anthropic. These two are basically building the AI skyline together.
But look, this is not a risk-free situation. The AI trade is packed, shoulder-to-shoulder packed. And fading hopes for near-term Fed cuts aren't helping highly valued tech stocks. Nvidia dipped 2.9% on Monday and closed at $181.18. So yes, there's enthusiasm, but also nerves.
Yet the fundamentals, they're ridiculous. Growth score 98.6, quality score 92.9, return on equity 109.4%, long-term growth forecast 36.7%. You read these numbers and wonder if they accidentally combined 3 different companies.
Stock snapshot time closed at $186.60, market cap $4.6 trillion, a 52-week high of $212.19, and a low of $86.62. Trailing PE 53.2, forward PE 31.1, revenue $165 billion. Institutional ownership 69.1%. Everything about this company is big.
Our scoring system has Nvidia at a solid neutral, around a 7. Not super cheap, not overvalued insanity. They're above AMD and Intel, but below Google and Amazon. Earnings component rating? 8, which is pretty bullish for a company this large.
And analysts keep getting more optimistic. Over the last 90 days, price targets jumped from $189 to $231. EPS estimates rose from $1.18 to $1.25. When analysts start quietly nudging numbers upwards before earnings, that's usually a sign they've peeked under the hood and liked what they saw.
And the longer-term EPS trend, this fiscal year, $4.53. Next year, $6.70. That's a 12.6% jump, on top of the fact that they're already printing money like a mint. Rating breakdown, 22 strong buys, 37 buys, and 1 brave little sell.
Let's talk earnings surprise history. Out of the last 4 quarters, 3 beats and 1 miss. Average surprise, 1.3%. Over the last 12 quarters, they beat 83% of the time. The quarter they missed, April 2025, was honestly more of a hiccup than a disaster.
Revenue forecasts are insane. 2024, $60.9 billion, 2025, $165.2 billion, 2026, $270 billion, 2027, $450 billion. That's 58% growth next year and 120% the year after. This is not normal. These numbers look like someone accidentally turned on God mode in a business simulator.
Fundamentals, margins, liquidity, efficiency, everything looks pristine. Operating cash yield is low at negative 11% because they spend aggressively to stay ahead. But gross margin is 70.2%, net margin 52.4%, revenue growth 71.6% year over year, and debt to capital only 9.6%.
Valuation is pricey, sure, but not out of control for this kind of growth. Forward PE 32.1 is actually lower than its historical average. Forward PEG ratio is 1.0, which is almost value stock territory in AI land.
Cathy, risks. Volatility is no joke. Beta is 1.94. This stock moves almost twice as fast as the S&P. Over the last 90 days, it's been more volatile than 81% of the index. So if you're the kind of person who gets motion sickness on elevators, this isn't the ride for you.
Price momentum is strong. Nvidia is sitting near a 3-year high with a momentum rating of 10. Historically, November is one of its best months, average return around 9.5%. But December, weirdly soft, averaging negative 1.8%. Oh, and insider selling has been noticeable. Not panic selling, but enough to raise eyebrows.
Quantitative research gives Nvidia a wide moat, basically meaning good luck catching them. Uncertainty is high because everything around AI is moving fast. But get this, Nvidia trades about 6% below its quantitative fair value of $199.25. So despite all the hype, models think it's slightly undervalued.
Financials for the nerds. Revenue, $165.2 billion. Operating income, $96 billion. Net income, $86.6 billion. EPS, $3.51. Free cash flow, $82.95 billion. Efficiency metrics off the charts. ROA, 76.65%. ROE, 109.42%. ROIC, 95.04%. It's like reading the stats of a video game character with maxed out attributes.
Bottom line, Nvidia heads into today's earnings with towering expectations, impeccable fundamentals, monster demand in AI, and broad analyst support. But with great expectations comes great volatility, and this report could jolt the entire market.
One earnings call could set the tone for tech, for AI, for the market, maybe even for the rest of the year. So buckle up, today is going to be big.
That's it for today's Oats and Moats. We'll be watching the numbers and we'll break it all down for you tomorrow.
Don't forget to subscribe to our YouTube channel for smart market talk with a little personality. We'll see you next time.